Okay, so I wanted to get through wanted this week's class to kind of pick up a little bit where last week left off. Last week we taught the majority, about 75% about trend lines. And how we can do trend lines at higher time frames, either like the 4 hour or the daily, and then we can see how it correlates on lower time frames, to make sure that we are with the trend, or reversing a higher time frame structure, what have you. Okay. If that was helpful to a degree, give me a 4, please. If that was helpful, if you learned something from that, because my objective is to make sure that we can look at charts and can see what's going to happen. Great, awesome. My objective is to make sure that we are able to look at charts, can just get some tools, draw some things, and be able to ascertain what's going on and what's going to happen next. Okay. And then add that knowledge that we already know, and simply use indicators as a confirmation to what our eyes already see. Okay, so that's our objective over the next couple of weeks. That I feel that we know indicators, and up is up, down is down, green means buy, red means sell, this level and that level. That's all well and good. But if those things stop working, you still need to be able to look at a chart, can tell whether it's an uptrend, downtrend on a higher time frame, and look to see on the bottom, on a lower time frame, and then use price action as an indication that something is about to happen. Okay, and so I love indicators just as much as anybody, but I don't want us to be handicapped by them. Okay. We want them to start being confirmations for what we already see with our eyes. Okay, so we started with trend lines, higher time frame, lower time frame entry, but we ended on Fibonacci. Fibonacci can be a very complex topic. It is very useful when you know how to do it. And so I felt the need that there was a couple of loose ends there. So I want to go little deeper tonight, a little deeper dive into Fibonacci retracement. And then I want to do Fibonacci extension. Anybody ever heard? Give me a 9 if you've ever heard of Fibonacci extension. They're two different things. Anybody ever heard of Fibonacci extension? Maybe not. Okay. Well, that's great. That's great. If you haven't heard of Fibonacci extension, we're going to go over that tonight, and you will know the difference between Fibonacci retracement and Fibonacci extension. So I think y'all, for me doing my hands like this and that, I think y'all kind of know what it means, but we can formulate it two different ways. Okay. So what I want to do first, I want to just show hold on one second. Okay. All right, I'm going to send you guys over here so you can see this. I'm going to share the screen. Okay, if you can see that, give me a 2, please. Somebody give me a 2 if you can see that. Okay, great. Thank you. So what do we see here? We're on 15-minute on the, let's go through our paces first. Let's go to a higher time frame where we're at. Second. Let's go and look at what the chart is telling us currently, where price is at. And this is not current. I went back in time a little bit. Okay, this is back in September, October. All right. So would you all say this is in a downtrend or uptrend at this point? Somebody give me, you got a 50-50 chance, uptrend or downtrend. Down. Let's see. That constitute downtrend. All right. I would say, yeah, you're probably right. I mean, one could say this could be a little minor trend here. Okay, so this is kind of a pattern. Okay, I'm not the best on patterns, but you see this conversion here. Okay, so we're possibly looking for a breakage of this, maybe a retest and going down. We could see if it hit this and kept going up. It's kind of in an indecision place, okay? And that's fine. So what we're gonna do, we're gonna go down after having created this framework here. Let's go down to the 15-minute. Let me, and we can see now, we can see, as I'm gonna zoom out just a little bit, we can see, let me see, reset chart. Thank you. Did I lose everything? Oh my goodness, I lost everything. I'm sorry. Oh no, it's right there. Okay, so we can see these points where price is kind of pivoted here and here, and it could be possibly right here. Okay, so we go to 15-minute. The reason for 15-minute is just because I just like the 15-minute, guys. So it's no magic to it. The 15-minute is fast enough but slow enough. Let's see, let me turn this off. All right. Great. So as we can see here, we're gonna go in. We can see, so let's say we already know this is in a downtrend currently, right? And we're trying to find a place where we can enter in, all right? So based on Fibonacci, we see it's going down here. So what we do, we would do, this would be kind of our swing, our most recent high. And this would be our most recent low, or you can use this as your recent low, okay? What we're trying to do is we don't want to chase. We don't want to chase and jump in. How many of y'all have ever jumped in like right here and then all of a sudden it goes back on you, right? We don't want to chase trades. We want to let trades come to us, right? Now, in doing so, we have to know that the trade wants to breathe, okay? And so it's going to pull back. Whenever it's going down a good bit, it's going to pull back. So what we would do, we would grab our Fibonacci tool, okay? And we're going to take it down to this low. All right, I'll take it down to this low. Hold on one second, let me let it go here. We go from swing high to swing low, or swing low to swing high, depending on your direction, okay? This is the swing high, we went to the swing low, okay? And what we do, we look to see what is getting close, and let me zoom in a little bit here. We look to see if something is going to enter the golden zone, okay? What is the golden zone? Golden zone is 0.5, 0.618, or 0.7. That is like the rich. Some people argue that 0.30, 382 is in the zone. It's up for argument, okay? But these definitely, okay? So what do these numbers mean? This is 38% of the retracement of this move. This is a 30% retracement. This is a 50% retracement. This is 61 or 62% retracement. This is a 70% retracement. This is 80 and this is 100. That's all it means, guys. Okay. And so mathematically, things normally come back to this zone. When it pulls back, it's going to pull back within, it's like a rubber band. It has to come back to its median and normal shape. Okay. So we can either wait for it to come up here. We could put a pending order in this area, All right. But this is this golden zone right here. All right. So let's play this along to see what happens. And what does it do? It goes right, as y'all can see, it went right to the 50% retracement line. Okay. So what we would do here, we would get in, we could get in when it rejects. Now, either you can put a pending here, or you can wait for the price action to tell you that it's time to get in. Okay. It went and touched it again. It still wants to go. Let's see what it does. Let's see if it goes up to the 61.8. Okay, so it didn't. So we've got confirmation now. Now we've got consecutive. When we see this engulfing here, this is an opportunity to get in right here. All right. So we can get here on this short position here on this candle. You can put it above the swing high if you like, or you can put it above the next fib line. Okay, it's whatever your preference is. All right. Now, this is almost always mathematically happens, guys, and I don't know if it's going to work here. I always take my thing down to the 61.8 line. Now, this is a big, I don't know if it's going to go down this far. I do not know. But this is because mathematically, I don't know how it works. Fibonacci, I'm not a mathematician, but the 61.8 line, both in its retracement and going forward, price is attracted to those areas. Okay. So let's see where it goes. Played around. We're in some pips at this point. You see it? Y'all see it? All right. You see it? Hit that. Came back a little bit. That right there is another fib right there. Y'all see that? That's an area fib. That was a retracement. We could actually do a fib right there. I'm just going to fast forward this. See where it goes. Okay, in this case, it looks like it reversed. I don't know if it's going to make it down there. Will it make it down there? I don't know. Let's see. This is a lot of time. So I don't know how realistic we would hold this. Okay. But that was a long drop. That was 300 pips. That's a long trade to hold. Let's see what it does. Will it break? Will it break? I think it's going to respect that trend line, guys. Yeah, I don't think it's going to make it. You see how that is respected? Boom, it hit it. Y'all see it? And you see how price is just snuggling around that line? Okay. That's the magic of Fibonacci. It is mathematics. And when you understand that this is a it took a long time from the entry of the trade. I mean, you would have got in October 18th, and it basically took the rest of the month. So that would have been like 14 days in order to get there. But it got there, and it was 300 pips. Okay, 300 pip move. You were willing to hold that long, it got you there. Okay, but mathematically, I don't know about the voodoo of the numbers, but it works to where price is attracted to that 61 0.61 0.8 or 62% if you want to round it up. Okay. And you can do it anytime. I mean, we could have done it here. We could have done it. What's this other retracement we saw? Let me get rid of these drawings. We could have did it or shorter. This swing high to that swing low. We could have did it really quick. Okay. Okay, so there are areas of Fibonacci within other areas of Fibonacci. Okay, if that makes sense. If you do this high to that low right there, look at that. See, we went right to that 61.8. Let me zoom in so y'all can see it. Okay, this was the swing high. That was the swing low. It hit exactly. All right, it hit exactly on that 61.8. You could have put it 2 fibs above or 1 fib, whatever your level of comfort is. Take it all the way to the 61.8 and look what it gave you. Came right back there, okay? Okay, and so this is the great part of when you're talking about doing a retracement. It makes it so you can always take part of a move, regardless as to what. Let's say you don't get in at the beginning of the move. That's okay if you don't get in at the beginning of the move, because you could take part in the move later on, but you have to wait for the pullback to happen. Okay, especially if we know that it is rejecting a higher time frame structure. Okay, that's really important. When we know it is rejecting a higher time frame structure, we know it's going to be going this way for a long time. Okay, like this right here was a rejection. This big move right here was a rejection of daily structure here. Okay, so when it rejects daily structure, we know it's going to go for a long time, but we have to find the right spot to get in, because the daily will take you back way the other way, and you want to get into with the flow of where it's going. Okay, and so that's how we use Fibonacci retracement in order to facilitate that. All right, so let's talk about Fibonacci extension. Okay, there is a difference between Fibonacci. Is a bunch of different Fibonacci's, but there's a difference between Fibonacci retracement. Retracement means to pull back, like a rubber band would pull back and retract, okay? Versus, and let me go to another pair. Just want to get rid of that. Versus, let's do, GJ has a lot of good movement. Versus Fibonacci extension, okay? And that means to extend, like an antenna that used to be on your car. You know, they would mechanically go up, it extends up, okay? So it uses a similar mathematical equation, and it's found here in TradingView, and it's called trend-based fib extension, okay? Now, what you do with this one is you connect 3 points. So I'm gonna, let's rewind this right here. All right. We don't know what's about to happen, but I do know this is a good entry. Okay. We saw it pull back. Let's say we're in this trade, and I want to know what can I expect so far as the possibility of the take profits that I want to look at. Okay. Because I don't really trust this stuff to the left. So here's what we do. We do Fibonacci extension. We do the swing low. We go to the swing high. All right. You see that pop up? And then we bring it back down to the swing low. We make a triangle. Y'all get that? I'm gonna do that again. We're going to do swing low, go to the swing high, and bring it back down equal to, that's what they call an equilateral triangle, right? Up, down, you make a perfect equilateral triangle, okay? And what we see is, we now see, look at these perfect areas where price has been before. Okay? Look, Look at this line. See how price was respecting this line? See how price was respecting this line? Okay, and what this is giving you potential. Let me do it again. This is giving you potential places where you can set your take profits, okay? Okay, here's the 61.8, the 61.8, and you can have a 361.8, okay? So I can set this, let me do my horizontal line. This is gonna be my take profit 1. I can say this would be my take profit 2. Okay, let's do 1, 2, and 3. All right, and this is my take profit 1, 2, and 3. All right, so let's fast forward this and see where we go. Fast forward here. Getting there. Take profit 1 hit. Take profit 2 hit. Take profit 3. That's it. And it mathematically, you don't need as much data as you do with the Fibonacci retracement, because we're not trying to measure where it's going to retrace back to. We're already assuming that we got in. Let's say we got in right here on this entry right here. Well, based upon this move, and we bring it back down, it automatically gives calculation of areas where price is likely going to hit and or turn around. Okay, I'm gonna show you guys this again. Let's go to another pair, because I know this is different to look at. Okay, let's do US CAD. All right, oh, this is pretty right here. All right, this is pretty movement. All right, let's say let's do this. Let's first do a Fibonacci retracement. Let's take it from here. Take it from the swing low up to the swing high. Y'all see that? And what do we see? Price came back to this zone. So this would have been your entry. Okay. All right. This would have been your entry right here. We could have said we're going to go long in our position. We're getting in right here. We're putting our stop about 2 fib lines back. And our target will be our 61.618. All right. That's a way to do it. That's no problem. But let's say we're already in the trade. And we want to do the extension. So we're going to go up. We go right here to this swing high right here. We're going to pull it back down. And what do we see? We see some areas where we can take profit. That's TP1. This can be TP2. This can be TP3. Now I don't know if it's going to reach it. Let's see what it does. Oh, well, this is current price. It's current price action, so we don't know yet, but it came very close at this juncture. Okay. If you want to bring down to that little swing low, you can, and then that hits perfectly. All right. And both of them are, this one is less about entry. This is already assuming you already have entered. It's just so that you can plan out your trade better for the various levels that it may go to. All right. Any questions on that? This is fib retracement. All right. We see the swing high. Go to that swing low. What do we see right there? What did it hit? Y'all see it? Hit that 5, the 50% retracement right there. Right? We now can do that as our entry. 2 fib levels above. I usually put it at the 70. That's about 20 pip stop. I now can go down to the 60.618. And as you can see, that was easy pips. Okay. Now, let's say you're already in it and you're looking for a place to exit. All right. I can use this same I'll edit all that other stuff out. I can use the same level here. Y'all see the potential for this triangle right here? Y'all see that? Whenever we have a nice little V, either one way or the other, hit that peak, hit that low, bring it back. Let me add in 3. There's 3.618 right there. Okay, great. I don't like that color though. Anyway, now I got my levels. I always do. I prefer the 618s because price is just attracted to those. And as you can see, it hit every last one of them, y'all. 1, 2, 3. Okay. So if you're in a trade already, you can use this for your entry. You can then do it for the extension to set your levels. Hey, I'm thinking I want to go here, here, and here. And as you can see, it hit that last 618, pivoted, and then started going up. Right? Anybody want to try one? I will give you control of my mouse and we'll walk you through it. Any brave soul? Nobody wants to be brave tonight? All right. That's fine, but y'all, it's really not hard at all. It's really not hard at all, okay? It just takes practice and your eye will get used to it. And I'm showing you guys exclusively on TradingView because this is the best place to do analysis. All right. I can clearly see right here. I can clearly see right here that I can use this field, but I can take it to this high. And as you can see, I see you, Mr. David. As you can see, it came down to this zone, and these were your places of entry right here. Gave you 2 opportunities, right here and right here. And you could have gotten into that trend, and it would have taken you all the way up, okay? So it doesn't have to be a big trend that's retracing back big. All of these are little movements. Yes, sir, Mr. David.
I guess the thing that I have with looking at the, I guess, because we're trying to do these without indicators. So we don't have the oscillator or any of that or buying or selling strength. My question is like, how do you actually know that you are at the bottom of or at the top of a high or a low? Because I know you're on the 15-minute. Are you doing it totally by trend and saying, okay, if I know, like right there, how you got it now, if I go to that lowest low, I know that that's uptrend, but the rest of it look like it's consolidation. So how do you know whether it's getting ready to take off or whether you at the lowest low that you'll start drawing it, or do you, because what we can see everything now. All
Sure.
this is, this is happening, but when we're placing a trade or when we're going into a trade, we don't have anything on the right.
Sure.
So I guess, what is it to say, okay, this is where to draw, but this is where to get in. Do you get in like at one of the 618s, or you get in? That's what I'm not sure of with the Fibonacci's, where your entry is going to be.
Gotcha. So that's where you kind of combine, in my opinion, trend lines, okay? Trend lines of higher time frames, okay? So let's go here to the 4-hour the 4-hour time frame. And as we can see, we can clearly see that we're in an uptrend right now on the 4-hour. Okay, we can clearly see that. Now, when you look at that on the 15-minute, now we see, okay, of course, we could go to MT4 and see right here, you probably, if you look on USD CHF, you probably see a daily and a 4-hour arrow pointing up right here. If somebody could look on your setup and confirm, I'll pretty much put money on that you probably see that, okay? So going on, now on a 15-minute, looking at price action, I already come preloaded to the 15-minute, knowing that it has just rejected off this candle. Hold on 1 second. I know that it has rejected off this candle. This is what we call a hammer, okay? That it has rejected for at least 4 hours, and it may be daily structure off this hammer. That's my indication to look out for possible strong reversal of this area, okay? So that would be your first indication there, okay? Now, here, would I feel comfortable getting in right here? I don't know. Okay. Because this is current price action on US Swiss. Okay. So here's what I would do. I would take it from this swing low. All right. I'm going to take my fib up to this swing high. Or let's do this one. Let's do this one. Okay. What I would do, I would wait until price comes back to this zone before I consider getting in. And it's getting close to it now. All right. That's what I would do so as to not chase. Now it may keep going up here and then pull back, but based upon this is a very short fib section where I could get in on this trend right now. And as you can see, we don't see anything to the right. But remember what I said, you say price has memory. And so now it may run higher. And so we need to go maybe to a higher swing high here. And then price will come up here and it will likely come back down to this area. But if we're trying to get quick entry, we go to the most recent high over to the left. All right, over to the left, last swing high matched up with this swing low. And I think it looks like price is trying to come back down in this area. So I would look at entry anywhere in this area. Yes, sir, Mr. David. Hold on, let me unmute you. Yes, sir.
Okay, so that area that you said you'll wait till it come back in, is that what you call your golden zone area?
Yes, sir.
So you will wait for it to come back there and then do maybe a pending order or something because it's going to take off again. Is that what you will probably do?
I would either do a buy limit, or if I'm going to sit here and watch it, I'll wait for it to reject one of these areas. When I see clear rejection, like if it came down here and did something like this and pushed off of that real hard, then that's when, and if it did like an engulfing candle, now engulfing means it engulfs the previous range of that candle, I would feel comfortable getting in. But most of the time I put a buy limit here. Now y'all remember pending orders, when I put a limit in, I'm limiting where price can go and it's going to go the other way. when I put a stop in, it's like I'm at the bus stop and I want the bus to pick me up and keep going in the direction that I'm getting in the path of where it's going. A limit says I want you to reverse. So here, based off this premise, we would want to get into a buy limit here, or we just wait for the price action to confirm. Now, let me go over here because I could be totally off. All right, let me go to USD Swiss. I don't know what is Gary tell us because I haven't paid attention to USD Swiss today. All right, look where we are, y'all. We're at the bottom of the range. We're rejecting the 4-hour structure. Y'all remember that? We're rejecting 4-hour structure and we're waiting for a possible entry. So what it looked like is it's about to do, and the indicators are kind of giving us more clarity now. It is engaged with these trend lines. It is probably going to go down, come down here again. And this is probably the area where we can get in. So let's do a fib here. Because you can do it on here. It's just not as clean. It's not my preference. All right. This is the same. That's why I don't like, yeah. The numbers are upside down. I don't like them like this. But this is the same golden zone. See the 38? Hold on. 38.2, 50, 61. So this is the same area where it can retrace back to here. All right. Here it could be entry, boom. Go all the way. So as y'all, I promise y'all, I pick USD Swiss at random, okay? But the trend, based on what the trend line, and hold on, let me, somebody's got a question? Let me stop sharing for just a second. Based on the trend line that we drew here on the 4-hour, let's go back to the 4-hour time frame. We knew that the 4-hour was in an uptrend. Y'all remember that? Mm-hmm. We knew that the 4-hour was an uptrend, and we saw it rejecting on the 4-hour right here, going up. So that's how I knew with certainty when we got over to the MT4 side that we would likely be, the indicators would likely be telling us that we're going up. And as we can see, we're in the buy zone and we're waiting for our confirmations to come in. All right. So this is just a space where you could get in early. Where, you know, some people, they don't have indicators say, hey, this is the safest place. They get in right here. And by the time it gets in where you get a signal, you're already in good pips. You know, that's how naked traders trade. They don't wait for an entry right here. They get in here when they see a clear sign of rejection of a higher time frame structure. And in this case, this would have been the candle to get in on, well, this one actually, because this is the rejection. This is the engulfing candle because this candle engulfed the previous range of the prior one, and you would get in on this candle. Get in on this candle, put your stop behind this one. As you can see, if somebody would have took that trade, they'd be in good profit now. We got in here, you would already be, you know, 10 pips in profit. This, I forget, this is US Swiss. Did I answer your question, Mr. Dave?
Yeah, sure did.
Okay, awesome. Did you want to take a stab at doing one? I take that as a no. Hey guys, look, the last thing I want to show you guys. Let me bring it up. Hold on, my wife. Hold on one second. Okay, all right. All right, you know you gotta respond to honey. Um, the last thing I want to show you guys, I think Mr. Riley, you asked about this, something that I posted earlier today. And let me pull this up. And that's this. Can you guys see that? You all can see that? Okay. Okay, great. So this is this currency heat wave. All right. This is an app that I have, I think is in Android or Apple. I can't remember how much it costs, but it's not much. And what it shows at any particular time, and it's different now looking at it than it was this morning. This is a screenshot of what I sent out, I think to you all this morning. What it's doing is showing the current strength of currencies at a particular time. Okay. And if y'all remember our early class that we talked about, that in order for us to make money, we need imbalance in the market. Okay. Meaning that if we have things that are near similar strength, we're going to have consolidation because this is a tug of war between economies. So in this particular instance, if we've got the Canadian dollar, would choose, let me do something. We got Canadian dollar against euro. That's a 5 against a 5.49. So it's going to be in consolidation. Okay. Versus if let's say we pick New Zealand dollar, okay, against the Great British pound, what direction would this pair be going in? And the pair would be GBP NZD. Somebody tell me what direction would GBP NZD be going in based off this? Exactly, Dwayne. It would be going down because based on this pairing, Great British pound is very much weaker than the New Zealand dollar. Okay, so based on that, let me look to see what GBP NZD did today. Let's look to see what GBP NZD. I'm going to, for the sake of time, I'll do it here. I'm looking on GBP NZD. What did it do today? And that was earlier today. And I think Great British pound was just weak all day. GBP NZD. All right, let's go to my favorite time frame, the 15, to see what it did today. And what did it do today? Let's go to the hour. Probably give us a better estimation. Look what it is. This is the range of the 18th. Starting, this is 17th, I'm sorry. Look at what it did today. It went down. How many pips did it go down? Went down about 153 pips today. Okay. That's what the power of this heat wave thing it gives you. Okay. Let's look at some other pairings. Okay. Let's look at you AUD JPY. Okay, AUD JPY. Based on this, what direction would AJ be bearish or bullish? Okay, correct. AUDJPY should be bullish during that particular time. Okay. And here's the thing, guys, those things reset in different sessions. In London, Canadian dollar could be the strongest pair. US dollar could be the weakest. In New York, they switch all over again. Okay. New Zealand dollar could be the strongest. Japanese yen could be the weakest. And then there will be other ones in the middle. Okay. So let's look at AUD/JPY to see what it looked like. AUD/JPY. Let me find it. Let me find it. Let me find it. Let me find it. Ooh, if it was a snake, it would bite me. Okay, it's right here. Okay, that must during this period of time. I think it was about this time. It was going up, but evidently it switched. Okay, so you have to look at it. A lot of times it will switch from London to New York. That happened to be New York. Maybe this was the New York time. Okay. But it is a great tool so you can see, because here's what people will do. And I know people who trade like this, guys. For people, particularly if you want to day trade, what people will do, they will find the weakest one and they will trade against the weakest one all day. So anything, because I guarantee you anything that had Great British Pound in it was either going down or going up. If Great British Pound was the lead pair. So let's look at that for the day, and then we'll wrap up. Okay, let's look at anything that is Great British Pound. Let's see what it did for the day. Hold on, let me get rid of this stuff. And here, guys, you can put day separators on here as well. Da, 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 I don't know where it's at, but anyway, you can separate the sessions, but as you can see right here, it was down for the day. Okay, it was down for the day. GBP AUD. Now this one was up for the day. Okay. Let's look at GBP Swiss. Well, I remember that from the day. That was a great call. What? It's the 18th is the day. Okay. As we can see, 18th is today, right? It was down for the day. GBP NZD, what was it? It was down for the day because Great British Pound was the weakest one. Now let's look at Euro GBP. Euro GBP was, with that being the weakest one, Euro GBP was up for the day. Okay. And so some people, that's how they trade. They find out what is the weakest currency, what's the strongest currency, and they will trade opposite that. That's how some day traders trade. Okay. And there's nothing wrong with it. People are very successful at it because they're not married to any pair. They just want to find the ones that are moving today. Okay. And the ones that move the most are the ones that you have the greatest disparity in strength. So I guarantee you GJ didn't move much today. Because look, they were in the same range. But if you had paired New Zealand dollar with Japanese yen, you would have had great movement. Okay. Any questions on that, guys? I know we covered a lot tonight, talking about fib retracement, talking about fib extension, and we talked about that heat wave map in order to find out where the movement is in the market. Okay. Make sure don't find two. If you use something like that, they have some online things, but I really don't like them. Don't find two that are close within the same range. That means that they're consolidated. Okay. But if you find two that are polar opposite or one that is weak for the day, bet against it. Bet against it, whatever way it is. Or if it's strong for the day, ride with it. And it'll put you in the right space. Okay.